Yes, yes.
Okay, okay.
Let's go. Let's go. Yeah.
All right. Is it recording, Abby?
Yes. Yes.
Okay. Okay, so uh, what I'm looking out for this coming week on gold before we go into the SCOB and then I round it up. So what I'll be looking for gold this week, gold is extremely bullish, extremely bullish. And from the weekly time frame, this is the level should be looking at for the weekly. But these are just long-term views, which most likely we might not get here anytime soon. Then going down to the daily time frame, we have our levels here. Have the first level here. So on the daily time frame, these are the both levels that we have on the daily time frame. Then on the 4 hours, this is one of the levels that we have. So my expectation for gold this week is probably, yeah, we are bullish, but we can't just keep buying. The market needs to make some retracements before we start the continuation of the buys. So what I'll be looking out for this week is we might have maybe, sorry, we might have on the 4 hours time frame, we might have something like this. And probably a test back at this level or a test back at this zone here, and then we can then get some retracement down, another form of test back at this level here, and we can get more push to the downside. So actually, for me, my I'll be looking for bearish market structure to the downside till we get to either this 4 hours level or this daily level. But most likely, if we are able to get down to this daily level before the end of this week and we see some reactions from this daily zone, we might probably continue the buys. But from Monday, Tuesday, Wednesday, I am expecting reversals like sell trades on gold back to these levels that have been marked here. That's what I'm actually expecting on gold this coming week. Looking for more counter trend sales to the downside before we start looking for the bullish continuation. So that's it for the top down analysis. Okay, but like let's go on the 1 hour time frame chart. Let me just show you something. So on the 1 hour time frame, we might have, because right now there is this level here. We have this 1 hour level here. So if this market is able to come down and break this level here, then we know that we might have some form of retracement, and then we move down to either this 4 hour zone or this 4 hour zone. But once this market is able to push down below this, is able to push below this 1 hour level, then definitely we know that we are entering a bearish phase on gold. If by tomorrow morning, once the market opens, and then we are able to push down below this 1 hour level here, then obviously we'll be bearish. These are just internal structures. It's called a substructure. I think somebody messaged me in the group, well, that was when, to ask me about um, structures and then the substructures. Uh, Gold right now on 1 hour is forming like a substructure. This is a substructure. This is the major move, and then inside this major move now, we can have substructures, something like this. So somebody now that doesn't really understand trend movement might feel like gold has entered the bearish phase when it is forming lower lows and lower highs, lower lows, lower high, lower low, lower highs, but not bearing in mind that this is the origin of the move. So if this is the origin of the move, all these ones here, all these ones here, these ones are what we call move. So it is only when gold breaks below this, it is only when we come below this low now, this low here. Let me take this out. It's only when we come below this low, something like this. So it is only when we come below this last low here, this last low here, that's when we can say that the structure probably has been broken to the downside. That's when we can have, like, let's say, a confirmed bearish market structure. But if we have anything inside here like these ones, this lower low, lower high, lower low, lower, they are all substructures until we break past this. So I don't know if the person that asked the question is actually on this call to actually understand what I'm trying to say. So all these movements are the substructures. So the same thing that we have here on gold, we can see that the market right now is forming like this is the major push, this is the main move on this 1 hour time frame. And then this one here, if the market starts coming down, this is the level here. We break below this level, we come back up, break below the level, come back up, something like this. We are simply just having a stop structure on gold before we get down to the main level. So that's it about the substructures. Yeah, basically this is what I'm expecting on gold this coming week. I'll be looking for more of sales till we get down to either this 4 hours or this daily zone. But the only thing that can give me confirmation for more sales is if we come down to this 1 hour time frame, and then this level does not hold on the 1 hour time frame, then obviously we are targeting this 4 hour zone or this daily zone. But if it comes down to this 1 hour zone and then this 1 hour zone holds, gives us an entry. Me personally, I will possibly buy if the market comes to this 1 hour zone and respects it. I will possibly buy from this 1 hour zone, probably to target the next high until we break the 1 hour structure. Then we can start looking for sales from the 4 hour zones down to this 4 hours next zone or this daily zone. So that's my actual forecast for this week on gold. So yeah, talking about the single candle order blocks. Yeah. So I'll show you guys more examples of the single candle order block, more examples, probably from the trades that I took last week. The trades I took last week, I will use them as an example to show the single candle order block entry. We have we have risky entries, and then we have more reserved entries when using the single candle order blocks. I mean, most times it depends on how I feel. Like I possibly use the risky entries, or I can use the more conservative entries when trading the single candle order blocks. I don't know. Can everybody hear me?
Yes, we can hear you. I think others can hear you too.
Okay.
Yeah.
Okay. So, for example, let me show you from example from my trades last week that I took. So first off, this was this shows me the beginning of a new week. That's why I have it on my chart. This gray line here, this from this gray line here to this gray line here is a week. From this gray line here to once the market opens is 1 week. So my Monday started from this place, this candle here. So I saw that we had a retracement, we had a zone at this point. So I just simply, for me, the way I trade, I just trade 4 hours zone to 4 hours zone. I don't complicate things. I don't look to catch every single entry on the three on the chart. I don't look to trade on looking at 15-minute zones, 1 hour zones alone. I just look to trade on 4 hour zones alone for my peace of mind, and it works well for me too. So, for example, I had an eye on this 4 hour zone here, in this 4 hour zone. So this was the zone here. This was the zone. This was when the price came to the zone. So I went down to my 15 minutes time frame. So on my 15 minutes time frame, this was my last candle, and then this was my 4 hour zone. So I can now take this line off. So this was when we tapped into the 4 hour zone, and then I was looking for entry at this zone. So, but what I saw, you know, this candle, this SCOB here, it's a very very massive one. If you look at
You come on,
the
collect
candle
money from
range,
the Azo. Don't like the life of credit to Azo and make it ego. I
if you
don't
look,
do it. But like, before it happens, I'm gonna
please,
maybe
oh, please, you
there's
get
no cap.
shoot,
Oh,
mute your
I
mic,
don't know this.
please.
I don't like it.
Yes. Yeah.
One thing gonna get from man and
Please mute
my
your mic,
Joe.
Joshua. Joshua, mute your mic, please. Mute your mic. Okay. So if you look at this candle here, it's about how many pip range? So it's about 45, 45 pips. So for me, this this candle here, this SCOB here was a very, very convincing SCOB. Me, most times, once I see this kind of convincing SCOB, I don't normally wait for like a W pattern, something like this. We have this type of W entry, and then we have this type of W entry. These are the two types of W entries that we normally use. Okay, this one now being the first leg, but now when the price came to my 4 hour zone, and then I saw this extreme bullish hammer candle and also an SCOP candle, the candle swept to the low of this particular candle. So this one now is like a more riskier approach when taking the single candle order block entries. We have the candle wick sweeping the whip of the week of this previous bearish candle, and then we closed very bullish in a hammer form. So for me, that Monday, this was the exact entry I saw. So immediately this candle closed, I just took my entry from that candle, because for me it was a very convincing candle, showing me that the bullish momentum is actually stronger than the bearish momentum, and then we are respecting this 4 hour zone heavily. And then possibly I was targeting 1:2, and then at 1:2 I was out of the market using the riskier approach, trading the SCOB. Normally the SCOB, for a more conservative approach, once the price comes to this zone, you have your zone, you have your first leg, then you have your second leg forming the neckline, and then on this third leg now is where you start looking for your SCOB. This is the more conservative approach. Or you have your first leg here, you have your second leg, then this third leg now, this is the time where you start looking for your SCOB, and then you buy, within knowing that the market will likely break the neckline. But now in this case, I got the SCOB on the very first leg. Normally you're supposed to be looking for SCOB on the third leg, like after the first leg, second leg. This third leg now is where you're supposed to be looking for your SCOB for a more conservative approach. But me, in this particular case, because of this candle was very convincing, and it was like a 45 pips candle, so I just decided to take like a more riskier approach on this particular trade with this SCOB on the first leg. Then I was targeting these highs for a 1:2, which gave me the 1:2, and then I was out of the market. This is a more risky entry approach, but a more conservative one is entering on looking for SCOB on the third leg and not on the first leg. This was on the first leg. So this was the first trade I took that Monday. I will go back now to other trades that I took, showing you SCOB, a more conservative approach. Let me go back to the 4 hours time frame, because I trade from 4 hour zones alone. I don't middle myself in smaller time frames. So immediately we broke below this low. I knew that we were now in a bearish. I knew that we are now in a bearish phase. So I looked at the next level where the price may likely reverse from, which was this level here, this 4 hour zone. So I marked out the zone. So immediately I marked out the zone after we broke down, and then the market was going back up to retest the zone. This was it. I just went down to my, let me mark that point. I just went to my 15 minutes time frame to look for my entries. So this was the start of the 4 hour candle, and then this was when we got to that 4 hour zone. So now look at it. Immediately we got to the 4 hour zone, the market gave an SCOB. This is an SCOB. This is also this one now. If you want to enter based on the the first leg, which is a more riskier approach, the first leg. For me, let me look at the peak range of this candle. It's about 27 pip range. and then the candle closed convincingly. The wick of the candle took out the wick of this previous candle here. Here, took out the wick of this previous candle here. It swept the wick, and then it closed heavily bearish, signifying that we have a lot of selling momentum from this 4 hour zone. So if I wanted to take a more riskier approach, which I actually did, and then I added second entry, I immediately took my entry from here, and then my stop loss was somewhere here at the high, something like this. This was a more riskier approach. I was targeting these lows here for a 1:3 on this first entry, for a 1:3. This was a riskier approach. Then a more conservative approach using the SCOB would have been this. Let me take this out. A more conservative approach would have been this. We have our first leg, we have our second leg. Then I told you that it is from the third leg that you start looking for your SCOB. And then we had our third leg here. And then you can start looking for your entries from the third leg. So this was the case of this variation of, sorry, this is the M variation that we have for this particular trade. So on this third leg now, on this third leg, we have our first leg, our second leg, and then on the third leg, and then this being our neckline. On this third leg now, I was now looking for my SCOB. So we see that this candle wick here, let me zoom it out. This candle wick here, you can see that this wick took out the wick of this previous candle, but in this case it still closed bearish. So now we have our SCOB, but we don't have a bearish confirmation. We want a bearish confirmation. Me personally, if this candle had taken out this previous candle high, this high here, and then you see that this candle now, before it closed bullish, it actually came down to this point before it started retracing back, showing us that the bulls are still in control. But assuming this market, this particular candle closed bearish at this point, this was where I would have taken the sell entry, and then my stop loss would have been at this high here. But now it closed bullish, so I had to wait for the next candle to close. Then this particular candle closed bearish. Immediately this candle closed bearish and engulfed this one entirely. That was where I knew that okay, the market would probably continue selling. So I just took my entry at this point, and then my stop loss I kept at that high. And then I was targeting a 1:5. I was holding this one now to the down part, still at this lows here, and then we got a 1:5 from this entry. So this one now, this particular entry was a more conservative approach. This particular entry was a more conservative approach using this M formation. This was a more conservative approach. So you can see that this first trade I got a 1:2 using the riskier approach. This here, the second entry was 1:5 using this one now a more conservative approach of the SCOB. And then I was out for 1:5. Then I think the next trade too. So let's go back to the 4 hour zone, because I normally use just 4 hours. I just trade from 4 hour zones alone. I don't mix with the daily time frame. All right. Okay. So immediately we broke this low. I knew that the market was still trying to be bearish. We are still in a bearish intent. So this was the next zone I was trade from. This high here. This was the 4 hour zone I was looking to trade from. But before we got to this zone, you can see that the market gave us like a substructure, and this was the low of that substructure. This was the low of the substructure. So I was already aware that if I'm selling from this high, this should be my first target because we have a zone here. And then if this target fails, this will be the second target, this low here. Uh, this low here should be the second target. So now on this particular zone, when the price touched it, let's go to the 15 minutes time frame. You can see that we had an SCOB entry, but a riskier one. On this particular trade, I used a riskier approach. So you can see that we had our first leg here, our second leg here, our third leg here. So ideally, it is from this third leg here that you start looking for your SPOB to take the market to the downside. Ideally, not from the first leg. The first leg is usually this is the M variation that we use on this trade. This was the M variation. That was used. Then you, but for me,
I hope everybody can hear him. I think his I think his
actually waiting
network is
for
having issue right
this
now.
this here, but you can see that it was the SCOB confirmation entry, and it also broke below this neckline. So if you would have traded, it would have been looking for an entry at this point. This candle was too large, so I couldn't have had an entry at that point because that candle was extremely large. And then your target would now be here, something like this, where 1:0.8. So it doesn't make sense because the target point. But assuming that my target point was actually this point here, not up to 1:2, I wouldn't have even taken the trade too. So looking for a more conservative approach, this would have been your entry, but it would have been a very late entry too, based on the candle was too big. So you can see how I used both the conservative and the risky SCOB to take my trades. So on this particular trade, it was the riskier approach I used. It was the riskier approach that I used to take the trade. So yeah, that's how the SCOB is being used. So I don't want to take so much time on this. So I think I'm done for the SCOB. If you guys go back and rewatch it, you'll be able to understand. So using just the SCOB um, risky approach and the conservative approach from Monday, Tuesday, Wednesday, I was able to make 1:2, 1:5 One is to 9 in total, on just focusing on 4 hour zone and then the SCOB entries. You understand? Just keep it very simple. That's how it should be. Not meant to be difficult. So yeah, any question?
All right, I have question here. Someone asked question
Okay,
here. He said,
okay, what's the
please,
question?
does SCOB work on other currency or other pair?
Oh yeah, yeah, it sure does. It works. It's a principle on its own, so it works on every other pair, but it must not just be used anywhere. It has to be used at key levels in the market. It has to be used at key support and
Okay.
resistance levels. Yes, or if you trade SMC, it has to be used when the market is at inside your order block. For example, people that trade SMC now, this would have been like, this is where you should be looking for your, this now is your order block, because this is another block. This zone is another block. So if you trade SMC, you can see that we took out structures here. This was a break of market structure. We came down. We have our imbalance at this point here, and then the market, after the imbalance, you have your liquidity points here. Yeah. You have your
All right.
liquidity point here, and then the market took out the liquidity into the order block, and then you can start looking for your STOB inside of your order block. So it works on all pairs. You understand? It works on all pairs.
All right. All right.
So any
Thank
more
you so much.
question?
If you have question, please just drop it. Drop it on the comment section. I will copy the question and give to him. I don't want us to make this particular class long. Just let's keep it
Very
short.
long, yeah.
Yeah. All right. Let's move to um GU. I'll be the one to break GU. Just let's see what we'll be looking for this week. So let me share my screen.
All right. So let me stop sharing my screen. Yeah, I'm coming.
Yeah. All right. I hope you guys can see it.
Yeah, yeah, yeah.
Yeah. All right. So when looking at the chart, you need to understand some things. Just ask yourself, what type of structure are we creating? That is the number one thing you need to ask yourself. And if you have answer to the question, you've solved number one thing, number one issue. So when you look at this structure here, you know that when you look at this structure here, you know that what we are creating here is just a simple break and retext. You can see it, a break and retext. So you can see that the market pushed up here, create this high, then pull back to gain this resistance, this support level here. Then now push up to break this previous high, then come back to that previous support level, then now push up again to break the, this recent high, then still come back to this level. Then now is about to break this high, okay, which I know that it has already taken the high out. So now, what are we looking for next week? Like this week, I mean to say, what we are looking for is just to take this way and trade the market, because it has already presented a pattern for us. Like it has already presented a pattern for us to follow. You just need to follow that pattern and trade the market. So what we are going to do now is to mark your zone. This is weekly time frame. What you need to do is just to mark your your flip zone. This is your flip zone. This is your flip zone. This is your flip zone. Then you know that before this was our flip zone. Here was our flip zone before. Then now the market created this new one, and this is now like this was our previous flip zone. So now we still have another minor one, but you have to check what will happen when the market create this way, because there's no major pullback here. So you just pull back with few candle, and there was not any consolidation in between. So what we need to do is to just mark this level. This is our flip zone and this is our flip zone. The market can retest to this point and still move up, or come back to retest back to this support level here, because this is our new support level here, right here. So now, once you mark it like this, the next thing you need to do is to go to your daily time frame. You can say that what I marked in my um 1 week, I think it rhymes in daily time frame. Then once you mark this your daily time, once you have marked all your zones, what you do again is to just look at your 4 hours. So in my daily time frame, let me adjust this. In my daily time frame now, you can see that we have this support level here that rhymes with a weekly support level. So we are going to delete it and leave the weekly on. Then we have another this support level again. It was a resistance. Then the market broke the resistance, and it is now support level. So we have this support level again. We expect the price to come back and see. We can now see a reaction, any type of reaction that the price will present at this particular zone. We will now know whether we can long it, because we are currently bullish. So we don't have any doubt. Anything we are going to do now is to just continue buying, except we see any structure being taken out. So now, once you look at it this way, you've seen your support,
Bro, no volume on your this thing. No, no volume.
Yeah. Can you guys hear me?
Yeah.
Yeah. Sorry, my system went off. I forgot to plug it. Oh God. Sorry for that. Sorry for that, guys. All right, let's continue. All right, as I was saying now, that you go to your 1 day, then mark the support level, all your key zones. Like from here, you know that this was our previous high, and the market has broke that high now. So we expect price to move up, then retest on it. So now you can see that before this happen, before this break of structure happen here, the market tend to pull back at this point. So we are looking at this particular area now for the retest before continuing to the upside. So now when you go to 4 hour 4 hours now, you can now spot your zone very well. All right, see, you can look at this. If you look at this, you see that above this line here, the price continue moving up, but below it the price tend to drop. You can see the reaction from here, reaction from here, here, and here. So right now we are above, and at this point we are seeing a support level. At this point there's a support level at this point. So this support level, we are going to wait for the price to come to this zone, and once the price come to this zone, we will now take the trade. We now take the trade, which is for up. Then in terms of your profit and your stop loss, once the trade get to this point, sometimes it might not even get to this point, it will reach this point before it will continue up. But anyway, like this is a zone that we can be watching, and also we will also be watching this zone too. So any side that the price reach as present a pattern, any pattern that we can take the trade, whether bullish and government or any candlestick pattern that you know that is for bullish, that you will not take the trade. That is it for GU. Then in terms of psychological level, I want to just uh, take the thing like make the thing snappy, so that we cannot waste much of our time here. So now, how to draw psychological level? Even this trade, this analysis here now, we can still put psychological level here. Then we will know where to take the trade once the trade reach that level and start consolidating or present a new chart pattern. We will now enter at that particular place or using a psychological level to enter. So now, how you will draw your psychological level? Number one thing you need to do is that you don't look your chart to draw your psychological level. Sometimes you will hide your chart, but if you don't want to hide your chart, don't look at any reaction. Like for example, now you start looking at this support level here now, and you want to match your psychological level on that support level. No, so you don't look at those area. Remember, psychological level are just area where bankers or big institutional or those hedge funds or investors reaching there, you now see the thing and price the thing. The owner of the thing, the person that is selling the thing now tells you that the you like to price the person. Is it not 500? That 500 they are round psychological level that you want to buy. Not that you cannot afford that 550, but you want to remove that equal money and pay the person, so that you will not be having a different thing in your pocket. So that is the thing. So how to mark it is that if you want to mark it with your chart, you should not be paying attention on the chart or any reaction anywhere you see support or resistance to mark it so that it will match. No, you always pay attention to the number. How, and remember, the number differs in different currency. Like for GU here, we take 100, okay, 1000. For GU we always take 1000. For example, now if you want to mark this GU, now you will start from any like for example here, this one is 1000, 31,000. You start from here, you place your this thing, you now adjust it so that it will be the same, so it will be the same um so it will be, you remove this 14 and put um 31,000. This 31,000, next is 32,000. You get, so the next is 32,000. You will be rounding it up. You don't use 32,500, 32,000, because some currency you will use it like that too. But this one, you know that the highest pips that it can take, like the highest pips that it will give you for a day is just 50 pips. So you will just be taking um this 1,000 round, like you'll be going 1,000 rand, which is 31,000, 32,000, 33,000, 34,000, 35,000. So at that zone, if you check that zone, you see that at that particular zone, you will be seeing that the market will be reacting at that particular zone. The price will be reacting at that particular zone. Okay, let's see, mark this one. This is 32,000. Then adjust it. It's 32,000. So if you look at this 31,000, you can see that at this point, the price, the market buy. At this particular point again, the market sold. Then at this point, when the market broke this psychological level, when it is above it, then you see that the market bought. This point again, this is 32,000. You see that there's a reaction at that point before the break up. You see all those points, you will be seeing reaction. Look at this side too. You see that the market sold from this side, that 32. So you will be plotting it in a thousand round, in a thousand round. So you will not be adding 500, 600. Those ones are not is not very strong like this. Not that they are not psychological level, but they are not strong like this thousand round. Like if you go to GU now, like gold own is 500 pips above, which is I think is 50 and 150. 150. For example, if you plot 100, let me use gold and show you as an example. Like for example, like this, you plot this from here. This is 100, like 500. You plot this 500, then edit it so that it will be equal. But because of this video, I will not, because we've stayed for a long time, I will not edit it this way. So now this is 2,500. What you will plot again is 2,550. You get, is 50 50 50 50. You will plot it in 50 rounds. That is it, 50 50. And that 2,550, if you measure it, that is 500 pips. And anytime it reaches at that point, you will see the gold will start reacting. The price will start reacting at that point. If you anyhow you plot it at that point, you will see the price will start reacting in different way. So that is it for that psychological level. So that's how you will be plotting it. I think that is the the normal way you can plot it. So that is it for today, guys. What you need to do is to just rewatch, ask any question you have, you just ask. Then I just want this video not to be long. That's why I'm rushing the class this way, so that you whenever you are watching it, you will not be bored to continue watching it. So I just want to end the video here. Then next time we will now talk. You will now suggest the topic you want. As everybody, like even Anthony here, as he's teaching, he doesn't know the one that you guys is having issue. Every day we keep on talking about one thing. So we need to understand the problem where you want us to talk about, to just touch on. Then we continue doing that. So now, and again, once you come to watch like this, always subscribe, because we have low subscribers in this YouTube channel, so that others will be benefiting. Subscribe and share, so that others will be benefiting. And if you have question, do we have any question? Okay, there is no question. So let's. Do you have any question? Is there any question? Can you hear me? So let's end the class. All right, bro. Biggie. In the group, ask the question in the group. I will attend to you guys. So the class I rushed the class because look at up to 1 hour. So we don't really need to spend all this time on only analysis and all those things. So if it is teaching, I would say okay for some people to understand. But these ones, we don't really need to spend much of our time. So we'll do this psychological parts. I will still explain it more. I will still show how to draw it and explain it more. But for the sake of not making this video long, we have to round it like this. All right, good night, everyone.